There, this is Aman. What's driving the market? This question has been in my mind since market has touched its all-time high recently. Before starting this, here is an interesting statistic. Global stock indices are down almost all over the world. At the time I am recording this, the MSI World Index is down around 17% for the year. The US S&P 500 index and Nasdaq are also in the red, down 16 and 28% respectively. Indices in Europe, stocks Euro 600 and China Shanghai Composite are also down 10% and 15% respectively. India, however, is up. BSE Sensex and Nifty is up 5.8% and 5.5% for the year respectively from January to recently. So let's proceed forward. The first factor is slowdown in inflation. India's retail price inflation or CPI is to 6.77% year over year in October 2022, down from September's 5-month high of 7.4%, helped by lower rises in food prices and strong base effect because the inflation has been in the pipeline since for a long time, and that's why we are seeing slowdown in inflation also in the USA economy. And let's proceed forward. The next factor is reducing price of Brent crude oil. Brent crude price fell to around 85.4 per barrel on Friday as investors await the OPEC Plus meeting on Sunday. Despite some speculation that major oil producers could cut output further, the cartel is expected to stick to its largest target of reducing oil production by 2 million barrels per day. On the supply side, the latest data showed that US crude inventories fell by nearly 13 million barrels last week, the most since June 2019. So let's proceed. The next factor is slowdown in rising interest rate. The Federal Reserve may scale back the pace of its interest rate hikes already in December. Fed Chairman Jeremy Powell said on Wednesday in a speech at Brooklyn Institute. He said, "It makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting." Still, Powell add that the terminal rate is likely to be somewhat higher than the 4.6 indicated by the September projection. And the Federal Reserve raised the target range for the federal funds rate by 75 basis points to around 3.45% to 4% during its November 2022 meeting, and making a sixth consecutive rate hike and fourth straight 3/4 point increase, pushing the borrowing cost to a new high since 2008. So let's proceed forward. Uh, Indian economy got highest FII inflow since February 2021. This can be because of several reasons such as slowdown in dollar index and strong results of companies. So there is a positive net purchase in the Indian economy in November 2022. That is why stock market is booming. So let's proceed forward. The next factor that that is positive for India is reducing 10-year US 10-year yield. The yield on the US 10-year Treasury note has seen a proxy for the global borrowing cost, consolidated at around 3.5% from its recent high of around 4.2%. So these factors is also helping our market to gain FII's flow. That is why we are seeing good increase in our market. So that's it all. Thank you so much for listening me.